Welcome back to another episode of Engineering Money, the podcast where some full-time engineers give their 2 cents in the financial news of the week. My name is Ben, a civil engineer in Washington State.
Ben, you didn't tell me we were starting.
I
I was
know.
talking about tea.
I know.
Caught us by surprise.
I wanted to
there,
see
Ben.
what would happen if I just started it.
Yeah, Joey's all messed up.
Oh my goodness! Everyone saw my video too small. I'm embarrassed.
Who are you, Tim?
I'm Tim. I'm a mechanical engineer in Indianapolis, and I bought 11 pounds last week.
11 pounds.
Joey, why do you keep getting small?
I just, I'm fading away to the background. By the way, I'm Joey, the food products engineer in Minneapolis.
Oh, wait. Oh, there you are. Okay. Nice.
Great.
Excellent. Good stuff. We got some exciting stuff. We're all back. Tim, where were you last week? We never figured it out. And you didn't tell us.
Where was I? I was in Ohio. I was just confirming that it's still a wasteland.
Little wasteland.
That's fair.
Oh, shout out to our one listener in Australia.
Oh, yes. Joey.
I've been meaning to do that for weeks.
Stop it.
Okay.
I think your quality keeps changing in that it keeps resetting the location.
Weird.
Joey, say some things. What are you talking
Some
about this week?
things? Well, oh my goodness. Let me jump right in, Tim.
Was that a little bit of a slur? Not slur. Yeah, slurred
What
speech.
is happening with this?
For those on the Spotify or Apple Podcasts, we're struggling with some video resizing right now.
Joey's video keeps going off the charts both ways.
And Tim, I'm having trouble enunciating because I've been recognizing people's name all day in the Minnesota High School Regional Science Bowl.
Yes.
And it's been taxing.
That's fair.
That
All right,
is very
Joey.
hard.
I'm just showing a graph here. I don't know if it's the right one.
All right, let's talk about this graph. What we're looking at here is the first day return on U.S. stocks after IPO. And the time scale here is over years. You see it starts in the 80s, and the last data point is 2020.
The only thing you need to know is that it got really high in the early 2000s, and now it's getting high again.
So that was
Right,
the dot-com bubble?
It's about twice as high as the kind of average level. It's halfway to the peak. So the headline there is the first day return on U.S. stocks after IPO are the highest level since the dot-com bubble.
That's pretty cool.
Right? It's and looking at what these returns are, I mean, we're sitting at about 40% return on the average IPO. So if you just bought every IPO in 2020 and bought it open, sold it closed, you'd make an average of 40% return.
That's pretty cool.
Kind of crazy. It's like stock market has big faith in the companies going public. The reason I wanted to bring this up is because we have a very special stock that will be going public sometime soon. The date hasn't been announced, and that's Roblox. Still
But
very excited for Roblox.
They're doing a direct IPO, right?
Well, that's the point, right? It's not a traditional initial public offering. It's a direct offering. And a direct offering is essentially, they're just like, hey, we have this company, and now it's public. You can buy our shares. So it's usually the insiders who own the company selling it. They can raise their own personal cash that way. And recently, I just learned this today, the New York Stock Exchange has changed its policies. So in a direct listing, they can also sell additional shares and actually raise money for the company. Whereas before that wasn't allowed. On the NASDAQ, it's still not allowed. Which is kind of crazy because the traditional IPO process goes through a bunch of regulation. There's a bunch of scrutiny on it. There are lawsuits if it's done wrong. Whereas the direct IPO, the direct listing, there really isn't any of that. And so the fact that they can raise more that way is interesting.
Sounds pretty cash money to me.
Yeah,
So is this all IPOs of all types, or is it only direct listings or only SPACs, or what exactly is this showing?
So this graph here, I think, is traditional IPOs, because IPO, that's tends to be what's understood. You're referring to is the traditional type,
Okay.
whereas there's direct listing, and Ben brought up SPACs, that is the other increasingly popular way to go public, and that's
All the
where,
kids are doing it these days.
yeah, thanks to our pal Bill Ackman, who thinks SPACs are the future. But yeah, this next chart we're looking at here shows that about half of the initial offers in this year were SPACs,
Mm.
and the other half were traditional IPOs. The direct listing that I mentioned, it's only been like 3 different times. I think
I hate
Spotify was the
SPACs.
first one. Then we have Slack, and I don't know, there was another one. But
SPACs are a fad.
SPACs are in season as of 2020. And what I think is interesting is looking at these two charts, you see this total money raised in US IPOs is huge this year compared to the past decade, two
Yeah.
decades, right?
Lots of new money.
And it goes right in line with that spike in initial return.
Interesting.
So both they're raising a bunch of money, and then the stock price skyrockets after that. So it's definitely one of the pieces that's been spurring the red hot market we've seen. But all that to say, look out for Roblox, because they said they were going to go public 2020 with a traditional IPO. Then they said, nah, we're doing direct. We don't want to deal with a dog and pony show of trying to like raise interest with banks to get them to invest in our IPO or whatever. They're like, we don't want to deal with that. We're going to go direct listing, see us in 2021.
Are there even any ponies on Roblox?
There is whatever you want on Roblox. That's the
Whoa.
point. It's up to the power of your imagination.
Just like Minecraft.
Or so I read. Yeah, just like Minecraft. Except I don't think there's any mining or crafting.
But, Joey, you forgot. We're sponsored by Vinovest.
Oh! Good point.
The wine investing. We have a link in the description. It's pretty neat. Wine's cool. You can get it sent to you. I think that's all I need to say.
You can drink
It's good stuff.
Yeah. Okay.
13.6% annualized return over the past 15 years with Vinovest.
Wow.
I just read the headline.
Maybe. Joey, we're not in a bubble.
But Tim, everything that I just said sounds kind of bubbly.
But
We've
here's the
been
difference, Joey.
Skyrocketing on a couple fronts.
The money supply was much lower relative to the stock market level back in the dot-com boom, bubble, whatever you want to call it. Right now, we have a bunch of money that's still around. So we're only at like half the level of... if you do S&P 500 level over the M2 money supply, we're only at about 2008 levels right now.
Isn't that the bad time?
Wait, is that pre or post crash? That's post crash, right?
No, pre-2008 crash.
Oh, so what you're saying is we're going to get another crash.
I hope so.
Because we're back at that level.
Wait,
Well,
doesn't that make it a bubble?
Yeah.
If it's about to pop?
One
No.
other metric we should be looking at here is the fear and greed, which is at the money shot right now. Look at
Ooh,
where it's at.
Oh,
nice.
69.
And that's been kind of steadily rising recently.
It seems pretty
It's
about steady almost. One of these shows.
it's no wild swings we've seen. Yeah, okay. It's been a little above 60 for a little while now.
Yeah, that's okay. We're not in a bubble. Don't worry about it. Stocks only go up. Actually, on Yahoo Finance this week, there was a headline that said stocks usually go up.
So what we've been saying is correct. Because the gospel
They're the
never
gospel.
I mean,
lies.
yeah. Yahoo wouldn't do us like that. But I think it is interesting just considering like we were officially hit a recession by several metrics with the coronavirus crash in March. And a lot of things are back up since then. I don't know if GDP wise we've officially exited the recession because that's only updated quarterly. But as far as the stock market goes, everyone's made their money back.
Mhm.
So,
Except for the
say-
people that sold at the bottom.
right, they did not make their money back. But if it's not a bubble and it's going to keep going up, that's a burning stock market.
Mm-hmm.
And it's also kind of fueled by I don't know, was it just this past week? Janet Yellen, who's the new Treasury Secretary, was saying it's time for lawmakers to spend and worry about the debt later. Which,
Yeah, and she said
Sounds like
that
a very
Bitcoin was
liberal
staking-
thing to say.
well, it's a liberal administration now. I still want to see, like, I don't know, the drama between Yellen and Jay Powell. Because she used to have Jay Powell's job. She was the Fed chairwoman. So now she's Treasury Secretary while he is Fed chairman. I wonder how well they get along.
I guess there's only one way to find out. Just keep living.
I thought it was
Nope.
going to be like pit them against
No.
each other. Boxing. MMA.
Tim, what do
No.
you have to talk about today?
Oh,
Yeah,
Me?
you.
well, we're not in a bubble.
You've already
Um,
said that, Tim.
All right, well, if we're not in a bubble, what should I invest in now?
NAK.
No,
NAK.
don't invest in them.
They're on my 2021 best list.
What you should invest in, Joey, is ARC-X.
Is that one out yet?
No, it doesn't come
hear
out
it.
until like the end of March.
Oh, jeez.
But
That's
start
so
building up
far
your
away.
money supply to buy in
Also, Palantir.
because it's gonna be huge.
Oh, and Fang. Fang has
Palantir.
been a really nice one, too.
Palantir is one of those direct listings.
Yeah.
They're one
Oh,
of the
were
few-
they?
Mm-hmm.
Okay, but ARC-X, it's basically just a space exploration
Oh,
ETF
shoot.
by
Nice.
Kathy Wood.
And
Who's the goat?
Kathy,
She's the goat
pretty
until she's not
popular.
the goat. But I'm pretty excited for it. She's made me a decent amount of money so far. But the key is you can't go jumping from managed portfolio to managed portfolio. Because our boy Peter Lynch, he's had like
The
what was it?
actual goat.
like 29%
I think it was 30. I
annualized.
think it might have
not
been
annual.
31.
It was like 29% averaged over his tenure at the fund. But
Oh, and it was like 31 years though. Wasn't it like forever?
yeah, but the thing that he said was people would often when the fund was doing well, they'd buy in. And then as soon as it started doing bad, they would be like, "Oh, I got to go find the next fund that's doing well."
Well, that's the classic scenario that you're advised to do, right? Buy high, sell low.
That's right.
Yeah. So yeah, I don't know. This is kind of off topic, but if you're choosing a managed fund, you kind of just got to stick it out unless they're doing like, I don't know. You got to make that decision yourself, but
That's how a lot of, I think in general, I hear that a lot for just any kind of strategy. It makes sense, right? If you have a strategy, you need to actually do it and stick with it. Way through, and when it looks ugly, jump out.
mm-hmm. Yeah. But I've also been reading he's going through in the book that I'm reading by Peter is he's going through all of his tips for picking stocks, and it's one of them is you got to find a company that's boring and has a boring name.
Mm.
And mining's one of them, Ben. Mining is boring.
It is. But it's going to be great in this era of high inflation.
Yes.
Yeah. Miners are awesome. Anybody that gives you basic materials that support our society
like miners because
are incredible.
Because it's just like you get the double whammy of those materials are inherently valuable and inflation will make them more valuable, combined with the companies can be doing well and they can be cutting costs, growing efficiency, expanding, and you get the double dip into growth.
Boom.
I don't see why more people don't drink tea instead of coffee.
Because tea makes you British.
We're American.
And therefore a socialist.
Coffee sucks.
Coffee is delicious. You don't make your coffee right, Tim.
Tea is way better.
Tim, do you even weigh your ingredients when you make coffee?
No, because I don't make coffee.
There you go. You're doing it wrong.
Speaking of
I trust
Starbucks,
you're going to be weighing your ingredients when you make tea.
I don't know how much this will affect the stock price. I don't even think it's made any sort of out of like local news, but this past week, it was actually like 2 days ago, there was a protest in the Pike Place Market in Seattle, and they like destroyed the first Starbucks.
Oh, that's the original one.
Oh,
Yeah.
Ooh.
That's
So it's
pretty
all
wild.
smashed up.
Why?
I went down there yesterday. Oh, it was.
Why'd they
Well,
do it?
I don't know.
Did they still give you an espresso?
Well, no, because it's closed because they smashed it
No.
up and stole all of the stuff from the inside.
Espresso?
Yeah.
Like, don't get me wrong. Coffee's like, it seems like it'd be a
Tim, I
fun
bet
thing
you
to get
incited
into.
that because you don't like coffee.
It's just not. Tea is
I
just
blame
better.
him. Tea is good. You got me there.
Coffee has too much caffeine in it. Tea, just the right amount.
I think we're gonna need
The
to pull
coffee's
our
delicious.
Discord. We'll put a poll in the Discord link. Go check it out. Please.
We need your help.
Prove Tim wrong.
This can't be settled here.
Yeah. Coffee is the goat.
Okay.
I only have one thing
Well-
to bring up today, and then I'm just gonna cut it off as soon as I finish. I'm not even gonna let you guys react to it, just so that we get it under 20 minutes here. But this past week, I think I'm a week late here, but I mentioned a while back that Visa was planning on acquiring Plaid, which is the online transaction handler. It's private still. That deal went through, or it did not go through, because the DOJ said, Visa, you cannot do this because then you would become a monopoly. And as soon as they said that, Visa didn't even decide to fight it. They were just like, okay, we won't do it. And so they backed out, and then that deal was supposed to be Plaid was going to get acquired for, I think it was $5 billion approximately. But then immediately after that, after the deal fell through, a bunch of private funds and stuff started talking with Plaid and gave them private money, which put their valuation at $15 billion. So it almost overnight tripled the company's valuation, which is crazy. So it'll be interesting to see what Plaid does next, because they're a really strong company. They would be really good
Yeah.
as a public, just on their own, but I don't know if they want to do that even. Okay, this is going to be less than 20 minutes, so sleep good, everybody.
Oh my gosh. Sleep good.
Sleep